Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, October 4th, 2024. It's 12:42 p.m. Eastern Time, and what we're going to do in this video is take a look at the gold and silver mining stocks primarily. We'll look at the metals, of course. We've got active trades out on those, but I want to cover kind of the longer-term outlook. The active trade that I've given you on all of them are based off the 60-minute charts. That's shorter-term stuff, short-term swing trade ideas. And then I want to update the longer-term outlook. So I'm also doing this for you, J.M. McCallum. You mentioned you've got quite a few gold and silver miner stocks. So and in there, in a reply to Jay McCallum, also I have an update on that. He asked for an update on the NTR trade right there. So breakout, several back tests, and then the minor trend line. That was covered in the video, but I think that subscriber said they couldn't make out the chart that clear. And as I mentioned in there in that video on those are the ag input stocks. Some had broken out, but quite a few hadn't yet. So when we get the additional breakouts, again, that video was just posted over the last week or so. You could check it out. I still very much like that sector, but will very much like it more when the majority break out. And that's what, when I go through these gold mining stocks right now, I'm going to tell you the same thing. Collectively, it's not about any one, even the leader. Birds of a feather flock together very much in this sector. I'm talking about gold and silver mining stocks. So that's what we're going to cover in this video. We're going to, I'm going to start out with the last big move, the last big bottom we had. I get very bullish on these miners back in late February. Did a video. You can pull this post here. GDX Silver and WPM was one of my favorite. Like I say, I typically, well, it depends on the charts, but when the charts line up for the big moves, I often favor silver and silver mining stocks in lieu of gold and gold mining stocks because they tend to outperform. And so that's what I had covered back in those videos. So you can see this was the end of February. We had just a beautiful long entries, clean, well-defined downtrend line. Silver at key support right there, 2255 on the SIL. I'm sorry, the Silver Miners ETF gave you some initial price targets. GDX also at just excellent support with bullish divergences, clean downtrend line, which to trigger an entry, and then of course one of my favorites, WPM. So that was then. Again, that was the end of February. Let's just pull up the recent charts, and we'll start out in kind of that order I just gave you there. So this was that entry right there, and was just a textbook entry. We bought it at support, had enough confidence the breakout would happen. It did right away, and it's been a 67% run up in the Silver Miners ETF. So again, to Jay McCallum or anyone else, you can have the individual names, but or you can just get diversity via this ETF, which is SIL. That's the Silver Miners ETF. Keep in mind, there's a lot of overlap. GDX is called the Gold Miners ETF, but a lot of these companies, they're not going to throw away silver into the dumpster when they're mining for gold. So they're called gold mining companies, depending on their location in the mines. They're doing both. So you're going to see some stocks, some companies in there, the miners that are both silver and gold miners in GDX. Just be aware that you have some overlap there. And then GDXJ and SILJ, if you put a J at the end, are the juniors. So SIL and GDX are the big miners, and then if you put a J at the end for those ETFs, you get the juniors. So SILJ, and same entry point. That was back in the end of February, and the juniors rallied about 77%. So it's you typically have higher growth potential because they're smaller companies. They tend to fall more in downtrends and rise more in uptrends. But where I'm going, and the whole point of this video, guys, is the charts are looking like we may have that turn off that divergent low, just like you had positive divergence here. Typically shy away from the juniors, but I'll trade them at times. Back then I was focused on the big names. That was a divergent low, gave you that rally that ended with, you got it. No, not a divergent high, just ended there. No divergence, but put in a beautiful divergent low again right when we got bullish at the very the end of February right there. I think that was the day of those. The video came the day before, and then right there. And so here's the thing. Technically, we come full circle. This is negative divergence. No sell signal on this one, but what I'm going to do in this video, and I like to do, I always tell you, index or sector is simply a sum of its parts. We don't have to go through every single gold and silver mining stock, but being that I started out that one subscriber has a lot of individual names, hopefully this will help. And the takeaway that I get from it is collectively, when the majority, especially the bigger miners, break down below the levels I'm going to cover in this video, then you have a pretty reliable sell signal. And again, the point I'm trying to impress is recently I threw out just the other day a trade idea on GDX. First short, we shorted gold and silver last week or the week before. Then I added this one, beautiful bearish rising wedge. Again, this 60-minute stuff. We've been slaying these stocks long and short, the miners or the metals on the 60-minute chart, all while walking, stair-stepping higher in an uptrend. And this is swing trading. By swing trading these rips and dips, you can blow away an investor in the sector if you're just, actively managing a position, sidestepping, because the givebacks are pretty sizable. They're double-digit drops. And, at the end of the day, it's an uptrend stair-stepping higher. And as when I shared these trades recently, they were just based off this 60-minute chart, which are relatively, short-term trades. We're talking about a 13.5% drop if that fourth target's hit in GDX. We hit T2 the other day. I pointed out there. We bounced as expected and hit T2 again. I list these price targets because they are support levels. As you know, support is support until unless broken. Upon the initial tag of my price targets, I typically favor a reaction off that initial tag. Once the initial tag has happened, you can still hold support, and then that could be it. Sometimes my final targets aren't hit. But I still maintain these targets now. And in fact, I'm probably going to extend the targets, which I'm going to show you why in the video. And the way it works is simple. Support is support until unless broken. So boom, your next objective, your next sell signal or objective short entry. You already had an objective short entry if you wanted to short the bounce back, but it would be on a break below T2, which is about 39.39 in GDX. Obviously, you want to keep an eye on gold too. Gold hit that first support zone, bounced, still below the bearish rising wedge on the 60-minute chart. These are still my targets. I'm still favoring a move down to at least this primary uptrend line and intersecting 233.54 level. That will give gold a correction of about 5.6%. But the metals and the miners tend to move in a multiplier of gold. And so silver, we shorted in anticipation of the breakdown there. And you have this minor little uptrend line that's walking up now. Still have a divergent high. And I still favor, move down to at least this second target here, right there. But now let's now while I'm on the metals, let me finish up with the metals. Let's go back to the daily chart here of these. Then I'll drill down to the components of the individual miners. Right, and then we'll, or the ETFs first, then the individual components, and we'll wrap the video up. So what I see is clearly, I'm going to borrow this one, duplicate that DH. It's just, this is trend trading here, or longer term swing trading. I'm now on a daily time frame. That holds more significance and kind of helps identify where we're going in not just the coming days to weeks. When I give you a trade on a 60-minute chart, that's my outlook for, in that trade. The holding period is typically measured in days or weeks. When I go to the daily chart, I'm typically looking at weeks to months. And when I go to the weekly charts, I'm looking at a trend that can last for several months or more, maybe even a year or more. Okay, so we're on the daily chart. We'll just keep it there for now. That was a divergent high on silver. Silver fell 42%, ended with a bullish falling wedge right there and positive divergence. That gave you this uptrend here. Again, the last time we got bullish on silver, gold, and the miners, it was right here, end of February. So yeah, it's nailing that entry. And again, it was a combination of all these things I'm covering now. They were all covered in that video. We had uptrend line support in silver. And again, one of the biggest moves in many years right there. And now, again, it appears while I'm doing the video, it may have come full circle. So when we look at silver, and guys, remember, trade the miners, the most important thing are the metals. They're going to follow the metals. So you want to see when you're bullish or looking to add or take longs, you want to make sure gold has broken out, or you can make a case to buy gold first and foremost. And obviously it helps to buy silver. And there's times I overweight the gold or the gold mining stocks. And there's times that I prefer to use silver miners, because there's sometimes silver will lag gold. And some of my best trades have been noticing that divergence there, the underperformance. And then when the charts tell me, like we did at the end of February, bam, all right, now's the time, because we had silver and silver mining stocks and gold mining stocks, everything at support, positive divergence, bullish divergences, plus downtrend lines to give us an additional buy signal. So, and that was this whole run. So there it is, guys. Just looking at the charts. We'll get to maybe the currencies in a second to support the case, but there's your uptrend line. So what I see right now, I see a divergent high. Was right about the previous high. In fact, we had that little whipsaw there. I don't know what happened, if that was a false print on silver SLV, the silver ETF, or not. Either way, gave us a divergent high, and you can see right here, this is a level that capped silver before. We had 4 days, or about 4 candles over a week of trading there. It got rejected. Did it again, tried to break out, and then rejected. So now this is your uptrend line. So if you want to set price alerts, come off the lows right here, set a trend line on the daily chart, you can see the negative divergence. It tells me that likely if we get that sell signal, we're probably going quite a bit lower. Quite a bit. Again, if we're calling these trends, it's going to be measured in double digits. Target right there, the same uptrend, this uptrend line. This is the one, this is your primary longer term uptrend line right here. But I'm not, at this point in time, I'm still longer term bullish on gold and silver. I'm just near term. I think we can have more downside. We're already short, but we might stay short depending on what I see here. And then maybe look to cover or go long there. You've got price support there, 27.13. So that's probably going to align. Let me see if that aligns with my 27.13, the uptrend line intersecting about 7% drop on the 60-minute chart. Well, it depends. 27. Yeah, I think I was at 27.13. Did I say somewhere in here? Either way, I'll watch both. I trade multiple time frames, so I just want to show you the level. So we don't have that breakdown yet in silver, but it looks to be right there, and we could break down any day now. Now let's look at gold. Gold being the most important of all. So in gold, this is a daily chart. You can see again, this is where we got very longer term bullish on the metals back there. End of February, that's that rip that started right after that. Gold broke out, and that was also that breakout to new highs there in gold. I believe that was the breakout. We broke above this. I got so many lines here, but this is a big multi-year basing topping pattern, trading range, and then boom, there was a breakout that came after, and we were already positioned long on that. There's the divergent high right there. So current negative divergence. You can draw a trend line right here, which is what I have on the 60-minute chart, remember. But I wanted to share this because I hadn't been, covering this with you lately. I've just been covering what's short term. So where does gold go? If it breaks that, probably going to go down to that secondary trend line right here. And if that goes, then you have 229. So that would be reasonable swing targets, pullback targets. That would result, if the 229 levels hit, about a 6.5% drop in gold, which would also correlates with roughly my third target. And there's that uptrend line right there. So what has to happen? Well, S1. S1 needs to get taken out, and that will then trigger the next leg down in gold. All right, so there's your 60s. Now we're going to go to GDX, and we'll get to the miners. GDX, I already covered. We just said T2. We need to take, just like gold needs to break the recent lows, which was first support level, GDX needs to break that T2 level to open the door to these next targets. Daily chart, again, we've come full circle here. We've had 3 consecutive divergent highs, which are all part of the same larger divergent high. That was DH1. DH2, right? And it's not as if each one didn't matter. They did. They were good for, and these are the swing trades we've been gaming here. That's a 12.5% pullback. Then we had, I believe, a divergent low, positive divergent, next leg up. So we stair-stepped. If you just, catch a good part of these, you're talking, 10, 20, 30, 40, 50, 60%. You can out-trade the metals by swing trading, which is primarily what this site's about. But I also will give you longer term outlooks for trend less active traders, and that's what we're talking about here today. So you can see you get these little minor uptrend lines and these little trends. It gets a little ahead of itself, corrects, and that's it. So wash, rinse, repeat stuff, right? You've heard me say that a lot lately, but that's because the market's been very conducive to swing trading. Little uptrend lines, correction. The only, for lack of a better word, for those that are gold bugs maybe, or planning to hold for a long time, the problem is that these divergences haven't reset. This is, for example, we had negative divergence there, and we had a big correction. Ended with a divergent low. So those divergences reset. This was a new divergent high and a new correction. All right, and this is just one much larger divergence there, and therefore that could send GDX all the way back down. Just kind of eyeballing it. You can see the support levels, the price targets I have here on this daily chart, and I'm just going to call them out for you. From the recent highs, it would be a drop of about 14% to get to that 36 support / target. It would be about a 18.5% drop to get to that 34-ish target, and then about 21%, which I think would be about it maximum, and that's down to 33.10. So that's what GDX looks like on the daily. Here's what SIL looks like. Again, it's one of my top picks back then. Right there, nailed that low, got in there, blew through, hit all four the price targets given to you at the time, kept going. I don't claim to milk out. Sometimes I milk out all of a bigger trend, but quite often I like to just get into the turns and milk the easy money and get out, and then you also sidestep, this chop and slop, which will stop out almost all, even long-term swing and trend traders. Why? If you just measure it, that was a drop of 15%. Then you had a drop of 25%. So, this was the easy money, the easy, take the money and run kind of straight up rip with very little give back. And again, we've come full circle. So I'm going to borrow that DH. We're going to duplicate it, and this is it. So after that February low, we've rallied about almost 70% in SIL. Are divergences sell signals? No, but they're indications that a trend reversal is likely, just like the reason we were long and bullish back here that was a divergent low. Positive, aka bullish divergent low, just like we did back here. And we had that big run, and just like we had that negative divergence, we would have probably shorted the metals there and got out of our longs. And so that's it. So where to? Maximum target. I can play around. I didn't update this chart. These are old levels from before. So I'm just going to pull it here. I would say anywhere. Based on the scope of the divergences, this is my maximum. I'm going to round that up to $30. And again, guys, I'll update this. We don't have the sell signals yet collectively on the majority, and that's what I'm about to get into. Let me get the silver miners out of the way first, because back in that video, they tend to go up the most, and that's usually what I favor. So I'm going to go to my list of silver mining stocks. WPM was one of my favorites back then. Again, we were long right here on the lows. The stock has gone up. If you tucked it away, more power to you, about 70%. And look at where we have now. A beautiful bearish rising wedge pattern, right? It's textbook. You got the negative divergences, the divergent high. You have a nice clean uptrend line, which should trigger a sell signal. You have a BOD, benefit of the doubt, support level at 57.90-ish right there, right? It was this previous high, broke out, went through it a couple times, but we had another reaction on it right there. And so if that goes, where to? Well, one simple way, if you get a bullish falling wedge pattern or a bearish rising wedge pattern, which you have here, you take the widest part of the wedge, which is going to be right there. I can take a little trend line, add that to where it breaks down. That gives you a measured target, and that measured target never, ever, ever fails to amaze me how often I do this, and the measured targets come right in line with a price target I already had. That's about 51, and we're going to make it official. We're going to round that up a little. That would have been an upside target on the way up. which was already hit, support. So that would be your maximum. And from where we're at right now, that's going to be a drop of another 15%. Remember, WPM has already dropped 9%. So there it is. Now, again, collectively, just like I do on the Mag 7, right? I want to see the majority break down. If Apple breaks down and the 6 others are doing well and they're above trend and a bull trend, I don't short the NDX or the NQ. I want to see the majority. If 4 or 5 break down, great. If all 7 are breaking down or have recently broken down, great. I have more confidence in shorting the NASDAQ 100. Likewise with the metals, it's the same way. Even though these are clearly bearish looking charts to me, this thing's still clearly in an undeniable uptrend with no evidence that the trend is over yet. When does that evidence come? When you start taking out previous reaction lows, when you take out the uptrend line that's pretty well defined, that's when. So that's a check mark. Trend line break is first check mark. Second check mark is a break below 57.90, and then so forth and so on. You go down and take out the previous lows. From the look of this, this is a fully mature bearish rising wedge. It doesn't mean it can't continue up like this. But wedges usually break down about 70 to 80, 85% towards the apex of the wedge. Apex are where 2 lines intersect. So this is a sweet spot right here. We're in it now, started where a wedge would normally break down. And so that's why I'm doing this video for you. We could certainly bounce here. And as I like to say, support is support until less broken. So for those of you bullish right now or looking to add to the metals, well, or WPM, for example, well, you can buy it here at support with a stop somewhat below or somewhat below that BOD level. And maybe you do get another high, right? All right, so let's go through the rest of them real quick. PAS, I'll go a little faster as I go on. I'm just going to point out the common theme. Divergent high there. That one's already off the divergent high. Negative divergence. Well, that's where we went long right there. Nice run up. AG, this one is poised to potentially break out. There's a primary downtrend line right here. And that was a divergent low there. This one's sucking wind compared to the rest of the sector. It's underperforming, but it's also at resistance. So there's a thing. Like I say, it could break out, but resistance is resistance until unless taken out. It had a couple little failed breakout attempts right here and here above that downtrend line that comes off those highs, and we're at the trend line again. So there's that one. MAG, Mag Silver, again, bullish falling wedge. Every reason in the book to get long and strong back at the end of February. When we went long, that one rallied about 88%. So a near double on your money if you took it. And we're still not too far off those highs, but we have big divergences building at this point in time. I don't have a clean up trend line or anything there. I'm going to pull this. That would have been a price target back then from, let's see, I created that back in 2020. Actually, I had that a while. And then I update it. So I'm going to pull it down a little bit just to kind of include these recent reaction highs and reaction lows there. So breaks under 14 will probably go down lower, but yeah, it's not. Yeah, I don't have a strong opinion on this one. And it's kind of got this little trading range here. So if it does correct, this was a trading range right here. Target would be the bottom of the range where you might look to buy that one back or close your shorts. That's down to 1154. That'd be a drop of about 25%. FSM, Fortuna Mining, we had that again. I'm sorry, I keep using the word beautiful, bearish, bullish falling wedge pattern with the sector and a lot of these stocks at support as well, right at their previous reaction lows. And boom, if you took it, if you happen to melt to the top, 142%. And then where did it end? With a bearish rising wedge, negative divergences. Breakdown. And see, this is why sometimes I'll get in front of trades. I tend to do that quite often, where if I have a strong degree of conviction that a breakdown or a breakout on a bullish setup is imminent, I will take a starter position ahead of time. Why? Because if you had a price alert and you were waiting for a break of this trend line, well, you got it on the day it gapped down, and it gapped down here somewhere about 14%. Not a very objective entry. I don't like to chase a 14% gap down. If you did, you shorted it there and then you went underwater. You were, profitable a little bit, slightly, but then you went underwater. And then you could have, of course, shorted at that kickback rally. But that's now we've come. I don't have a strong opinion on this one. I'm just going to tell you. But the common theme is we have these uptrend lines off the lows on a lot of stocks there. Let me just rifle through the rest. I haven't even marked a lot of these charts up, guys. There's some I want to just get the video out to you and let you know what I'm seeing. Big negative divergence right there on ASM, right? Silver, this is the sector itself, the silver mining stocks, and you can see we had a bearish rising wedge there. And what I can tell you on overall on the sector, we have resistance right here that we broke down from there. We're rallying back to, and any equal or marginal new high in the sector is going to be a divergent high, which we pretty much have. We have equal highs now for all intents and purposes. So you have big negative divergence, and it should look that way. There's the ETF. I already covered SIL. SLVP. Again, so you can see, I guess the last update I gave you on the daily, we're back here when these wedges broke down, and these guys corrected a lot of them. Well, before all said and done, they corrected about 20%. That was a second divergent high 2, DH1, DH2, and now DH3, right? Simple stuff. And no guarantees, but typically the bigger the divergence, the bigger the drop. So if the last drop was 20, we could be looking at that big or a bigger drop now. Even if we went down to that same low, it's a bigger drop because we're at higher levels. You can see there's also a little bit of resistance there. SVM, same story. This is it. So as you can see, as I said, guys, birds of a feather flock together, right? That's why these charts look very similar. And you can see a long-term trade. I give you back here. We had off this divergent low, we were bullish. These were targets I gave you all the way back in August of 2022, right here, August. So you can see that's when these were created. And, and I think I'm still longer term bullish. I still think if you are an investor, these are investment targets. Why? Because that was if hit, that's going to be a 240% rally. And you're not going to get there in a day, a week, a month. That's, again, a long-term trend target. I just think we'll probably have a correction, and it might be one you might want to sidestep before we get there. So far we went up and we just hit T4. Mark that. And again, I don't update this every day because we've been in it, you get out of the divergent highs, and I don't tend to position that long when there's evidence of a major turn in the sector. But if you want to, some of you might be long-term swing and trend traders, so that's it. So like I said, this says if we're probably going to correct before we get up there, and to where I'd love to see it pull back to about 316 right here. So a lot of these have and even 316 down to 295, so about $3, and that'll take it down about 32 to 36% if we get down there. Alrighty, what's next? EXK. All right, I'm just marking a lot of these up. Divergent high right there. These were long-term targets back here, and we just hit T3. But again, this is a volatile sector, so you didn't want to ride out after that reverse off that downtrend line. We had a big drop, and that was the where this one was highlighted in that video back at the end of February, along with the sector, and it rallied about 265%. All right, so that's it. That one's a bust. USA, this one looks better than most. Big downtrend line, but it's been a laggard in the sector, and it's starting to play a game of catch up. But nice looking chart. Low price penny stock, so that's why stay away. This guy could declare bankruptcy any day. I would have probably disclosed that in the last video, but again, it's the last of my silver mining, one of my watch lists that I have. So he had a breakout of the primary downtrend line, back test 1, back test 2. It's moving higher. It's at resistance now, 34 cents. It either gets rejected. Again, birds of a feather, guys. So if it breaks out, I mean, if you're looking for an idea, again, that's still the next target. But like I said, I'm seeing some yellow flags forming in the sector. Now we'll run through the gold mining stock, GDX components real quick. This gives you a better insight to the sector. I'll do it pretty fast, and we'll wrap the video up. I'm going, as I often do, I have a watch list of the components that loads every time I enter an ETF to the right. These are the holdings of GDX sorted by market cap. So Newmont's the big dog in the sector at $62.3 billion company, followed by AEM at $40.7 billion. GOLD, I can't imagine how many retail investors bought that thinking they were buying gold ETF. It's a company, not gold itself. But okay, point being, we can, you got to squint to see it. Is that a breakdown? We're below the trend. And yeah, we broke down yesterday, but there's a BOD level and there's a little wick. So yeah, we're below trend, but it's not impulsive yet. But it's, look, the breakdown, well, it doesn't look imminent. It's already happened. But the reason this isn't waterfalling is because the majority, there's still quite a few that haven't broken down. So once it becomes obvious to the masses that these breakdowns have occurred, that's when the selling begins to accelerate, and you'll start to see some impulsive candles. So you want to see this one walking away. But there it is, big negative divergence. That is, I don't have it marked up on a lot of these charts. Doesn't say DH. But you can just look at my lines here. That is a big divergent high, just like that was a divergent high, just like that was a big divergent low. And that's also when we were going long back then at the end of February, right there off the lows. And so, that one, well, we didn't milk. I didn't milk the whole thing up, but we got into it. And again, that was recognizing a trend change. That's what we were positioning for, not just a quick bounce trade. AEM broke down yesterday as well. And this is a pretty clear, I don't have to squint to see that breakdown. So there's a check mark, reason to maybe take some profits or tighten up stops on gold mining stocks or be short, like we are. GOLD broke down recently. There's your uptrend line, divergent high. I haven't marked up all the levels. If you are trading any of these individually and you want to chart, I'll sharpen my pencil. A lot of these are old lines that I had from back here on this daily chart. WPM has not broken down. I might have already covered that. This is a component of GDX, but again, it's also, I'd already covered it. So that one is yet to trigger a sell signal. And so that's the way it works. Oops, I didn't mean to move that. So the way it works is, you replicate these lines or draw your own trend lines and you set price alerts. And then one day if you're sitting there and you have 3, 4 go off, or that week you have, the majority of these things trigger sell signals, and you check the charts first and make sure it wasn't a whipsaw, just an intraday break. If they're solid sell signals, the sector's broken down. You want to get in quick before, because I'll tell you, if you wait for the turn, you wait for Kramer to tell you to buy these things. I said buy them here, and this is when Wall Street got bullish, probably right here, right before the big correction. And they're probably getting bullish again on the miners right now. Overall, I'm talking analysts and the bobbleheads that come on TV. They tell you to sell here. The sector's sucking wind, and then they tell you to buy here. That's just the charts will be my guide. So there it is. WPM is not broken down yet. FNV. Divergent high. I don't have a clear read on this chart. Just telling you it's coming off a divergent high. KGC. This one's right on the trend line now. We had a little whipsaw there, but it also, I'm going to tweak that line. Why did I do it? That was a major reaction high. We had another reaction high there, then a breakout, back test. So that's also a price target, 831. So on a break of this trend line, which I'm going to put it right here. We'll set an alert just for fun. And then below that trend line, the first target there is about a 12% drop. Next target probably be somewhere on that reaction low, maybe even right here. These would be my first 3 targets right here: 831, 777, and 727. Worst case scenario right now that I can see in the charts would be all the way down to 632. And that would be a drop of about 32%. And I'm going to guess most folks wouldn't want to ride that out if they're long this stock. RGLD, Royal Gold, beautiful uptrend line, bearish rising wedge, divergent high. Nothing else to add to that. It's just textbook. Set an alert. These guys go off. You're going to see some heavy selling coming in the metals. AGI, same thing. Uptrend line, divergent high. PAAS, divergent high, it's already moved down, kind of a sloppy near-term direction. Just go up, down, up, down, up, down. HL, Hecla, probably ECLA, I imagine, if it's, I believe they're located in South America. You typically don't say the H like Ola or Huevos, so it's maybe ECLA, I don't know. Doesn't matter. Symbol is HL. Uptrend line right there, divergent high. Sell signal come on the break of the trend line. And that's it. We can keep going. This one, AU, Anglo Gold, already broke down. Here's your primary uptrend line. This is a divergent high right there. Divergent high, uptrend line, breakdown, back testing, finally got rejected. problem with shorting back tests. You can do it; it's subjective, but you can keep back testing for a while. So I like to see that final rejection off there, whether it's the initial back test or after back testing for a while. That's what's happened there. So that one's already on a sell signal, broken down. BTG, I don't have the chart marked up. I don't see a lot there. I'm not going to force it. EGO, okay trend line, not super well defined because I only have a couple reactions, but it's got a big divergent high. Again, this is where it was highlighted, the whole sector right there. The end of February, good for about a 93% rally. The divergence says it's probably come full circle. BVN, big divergent high. This one's already rolled over pretty good down to that trend line, about a 40% correction, and it's bounced back. You can see these are old lines here. I've had this back since created back in 2013, updated in 2018. This line also updated in 2016. So I haven't touched these lines in years, many years, because they go back from here. This was a key support level. I was looking to short it once it broke, and the bottom fell out when it did. Again, that's when these lines were created back then, way back then, before then. And then look, rallied up, back tested it, rejected. Finally, remember we go bullish along these things here, and this one exploded up. Once it took that level out, it successfully tested it, support, traded on it again there, fell down. Traded right in my trading range again from years ago, and look, we're those levels, when you're above them, they're support levels. It's a support zone, as it was there. And when you break it, then it becomes resistance. So you short on a back test. So that's going on there. And we already we already hit this trend line once. We get rejected here. It's support again, as are these recent lows. There's that one. OR, negative divergence, little minor uptrend line there, giving you a wedge. Sell signal would take you down first to, you can have a little hiccup along the way, or about right here. They come in together. Uptrend line in 1773. If things get real ugly, all the way down to 1533. CDE, still above trend, but you have price support and trend line support coming in together about 586. So double support. Set an alert under 586. Break of that's going to probably take you down here to 444 with one stop along the way that I saw, and I didn't mark up right here for you if you are trading this one. First stop, 5.25. IAG, divergent high. Not much else to add to that. You got a longer term trend line coming off the bottom here. We'll probably come back and visit that if it gets ugly in the metals. It's a pretty crowded trade too. A lot of retail money chasing the miners and all that right now. So that's, despite the strong bid they've had. Again, it's a bid that was telegraphed in the charts a year ago, and we've come full circle, or almost a year ago, earlier this year. GFI, no opinion. This thing's just grinding around. So I'm getting down to the lower tiers. Remember, now we're at a EQX, as you see here. I'm going to stop. I can stop the video here. We're at 2 billion. So it's not going to move the needle like Newmont. So like I said, you don't have to set price alerts on each and every one of these. And it doesn't even matter how bullish these little guys look, because they're not going to move GDX as much as Newmont, AEM, Wheaton. Those big companies are, they're the almost like the Mag 7, if you will, of QQQ, but they're the, Mag 7 or whatever of GDX. So, all right. I think, before I wrap it up, one of the reasons that supported our short on gold and silver recently was Euro USD. There's that daily chart I gave you. There's the divergent high that I highlighted recently, and the euro is just getting pounded. That's with the dollar rising against it. And there's a very strong correlation, positive correlation between gold and Euro USD. So, and gold hasn't recognized, fully priced in this drop here. You can see the edit chart properties and go to GLD, throw it on top. And you can see here, as I scroll back a little bit, we might have to do FXC compared to it. That'll give us a direct correlation. We'll turn off all the lines. And you can see here that they move together. This is FXC is the euro, which is basically the euro goes up, doesn't go up in a vacuum. The dollar's the biggest component. So when the euro's rising, the dollar's falling against it, and that means that's bullish for gold. So gold goes up. Then, we traded mostly sideways here for a while in the euro, and gold did the same. But most recently, we've had this the big drop in the euro, and that hasn't been priced in. Gold's not gotten the memo yet. And, $1 million question, maybe it ends. Maybe that's it, and that's bullish. Gold's had a strong bid. That's the one thing that can offset the correlation between the gold and the euro. But let's see here. And euro is getting quite very oversold. It's going to bounce soon. Sooner or later, will bounce. But the thing is, will gold bounce as well, or is it going to start to price in some of this big move that it hasn't priced in yet? Remember, as highlighted recently, we had that big negative divergence on FX or EUR USD, and then the breakdown right there, and it's been just solid selling so far. So, and look, since euro is getting very oversold, we're coming up on support. It will probably bounce soon. That will could delay any breakdown. So as I said, that breakdown appears to be imminent on the daily chart for a lot of those gold mining stocks that haven't yet broken down. But imminent is relative to the time frame. I'm not looking at a 5-minute chart for a day trade. I'm looking at a daily chart that takes months and weeks to play out. And so just, again, the simple way is it could be tomorrow. It could be 3 months from now. We get the majority of those gold mining stocks breaking those trend lines and support levels I gave you. And the easy thing is set alerts and then, act accordingly, whether you want to use those sell signals as stops to get out of long trades that you're in right now, or you want to short or add to existing short trades. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.